Since my last video talked about portfolio hedging, I feel it's only right that I talk about that I do a market markup of bonds. I made the mistake in the previous video of calling the ticker TBT, the bond ETF, but it's really an inverse of the actual bond ETF, which is TLT. So just wanted to correct that mistake. But anyway, I thank you guys for joining another episode of Market Markup. Again, if you have any tickers that you'd like for me to mark up and weigh in on, feel free to leave them in the comment section, shoot me an email, whatever your preference for reaching me, I'm available. But my information is in the description box. But anyway, thank you for those of you that are returning viewers. If you have not subscribed already, please consider subscribing to my channel. Hit that notification bell so that you'll be one of the first to know when I'm putting out new content. I'm trying my best to put out relevant information that you can use and consume right away, pretty much at the moment when it's released. Um, but let's go ahead and get into the subject here with TLT. So of course we're looking at the yearly chart here. I've never done a breakdown on this ticker, so this is fresh and brand new for me and for you guys to see my process from beginning to end. But anyway, like I said, this is the yearly chart over the life of this particular ticker. So, like I said, I like to, or like I've stated in previous videos, I like to color code my my levels based on the time frame. And shout out to Mario for suggesting that. And I've pretty much ran with that whole process there. So again, this is the yearly chart, goes back to 2002. And so what I'm seeing right off the bat is this ascending channel situation happening on the yearly chart. So this is these two levels are very significant historically. And what we see so far this year is that bonds have fallen below this demand zone here, indicated by this lower trend line of this channel. I think I want to do, no, I'm going to keep it this color. I'm going to keep it white for the yearly chart. So yeah, maybe it's starting to kind of range a little bit here on the yearly chart. So from a macro perspective, we see that bonds are on this bullish trajectory overall, but over the last few years, that bullish trajectory has pretty much kind of leveled off, and we're pretty much looking at this area here in terms of the price action. So um, what I'm already kind of interested in is checking time and sales to see if I see anything today even, but just checking time and sales on a regular basis to see if we get any strong buying here at this lower range of the zone. So I'm gonna also draw a couple of trend lines here, because maybe, um, just maybe, it's getting pretty ripe to start buying bonds. And of course, this is not any sort of investment advice at all. I'm just giving my opinion based on whatever price action I'm seeing at the moment. And another chartist could see something totally different and have a completely different opinion as mine. So take some time to learn. If you would like to check out any of my courses, I just dropped one recently with By the Hood University called Charts in Price Action and Practical Psychology is the name of the course, but you can find it at chartsandpriceaction.com or guidechartsandsocialu.com. And so there's a part one and a part two to that, and it's designed to take you from beginner level to knowing how to read price action in real time. So lots of great nuggets in both of those courses. I'd recommend you check them out. And if you have any questions, feel free to hit me up. But anyway, here is what we're looking at in terms of sentiment on the long-term chart for TLT. So like I said, it's kind of just ranging between about this 115s to 160s area on a yearly basis. And you can see this big red candle so far for 2022. And that's it's quite interesting, considering the fact that interest rates are going up, and bonds are still trading close to their lows. So let me see what the 52-week low is on bonds so that maybe I can mark that on the chart. Give me a second. Okay, so this area right here is right at the 52-week low. So a lot of people tend to like to buy things at the near the 52-week low. Obviously, that's a key area as indicated by this chart. But keep in mind that this thing could continue to fall. It could break down at this 52-week low, or it could bounce here. But it'll take some time to see this develop. But it's only $1 off of its 52-week low, and after hours it's just over 118. So looks like the markets may be anticipating some favorable news for bonds in terms of JP and interest rates tomorrow. So this is one to definitely that I'll have on my watch list for tomorrow and the coming days, just to see how it kind of reacts to whatever JP says. But let's see. Let me see. I'm also gonna mark the midpoint of this range. That's just a habit that I've developed, and it tends to serve as a key level, in my opinion. So about 137.83 is the midpoint of this range. So I'm just going to draw a um, I'm just going to draw a I'm going to draw a dotted trend line there, um, just so that I know what it represents. Okay, there we go. So then we go to edit properties and change the style. I'm just going to do it like that. Alright, so got my midpoint there, but some levels that I'll be watching for this year, of course, is the 52-week low, and then right at this demand zone, which is now resistance, about 125-ish. So the mid 120s are just the nearest levels that I'd be watching on this one. Let's take a look at the monthly chart and see how things look there. So in the monthly chart, see a little head and shoulders situation. I'm gonna just see if maybe this thing is top or bottomed out. I mean, at this point, neckline just so happens to be kind of right there at that midpoint. So with the head being up here in this area, so I'm just gonna measure it from about 170. 70. 170. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70. 70 All right, so all right, so not quite. You know, if this is indeed a head and shoulders pattern, um, it could move down under 110. So I'm just going to draw a price level as um, kind of a representation of a range that it could possibly fall to. So I'm thinking maybe 110 to 105 ish. So I'm just going to shoot for like the middle area of that zone, right around. I'm just going to say 107 ish. All right, so we'll do a price level there. So keep in mind this is a monthly chart, so this is more, long-term type situation. Let me do my blue color for my monthly chart. Um, so this may take some time to develop if that is the case. But in the considering the fact that we know that interest rates are going to keep going up, that means bond yields will continue to go up. But one thing you have to keep in mind is that with the yield curve inverting, it'll be important to look at the relationship between the 20-year yield and the 10 and the 2 and the 30. Because if the 10 and the if the 10 and the 2, so the lower year bonds, the lower maturity bonds, have higher yields, then naturally money is going to flow from the 20 and the 30 down to those lower maturity bonds. So that's something to keep in mind. So don't necessarily assume that just because it's a bond that it's gonna uh, have that inverse relationship with the market. So that's a very important nuance to keep in mind. But anyway, let me get back to labeling my price level. Okay, so boom, there we go. So yeah, that's pretty much what I'm looking at. I'd be looking to see if this level breaks, and I'm just gonna go ahead and put a oh, it's not letting me. Uh, Wanted to try to put a an alert right on my trend line. Remove that price level, and well, it's not gonna let me. So I'm just gonna do a regular alert. Yeah, below. All right, so got an alert there near the 52-week low, and as you can see, so far this month it's holding at that level. Um, you can clearly see here on the monthly chart where the price is kind of obeying this yearly range as well. Price is holding pretty strong at the 52-week low. It rejected that midpoint on that second test, and then that third test it broke out and then confirmed it as support, and that's when it broke out to that new all-time high. But it sold off pretty rapidly back in when is this 2020. So COVID happened and it sold off with the rest of the market, and it has not recovered at this point. So nice little bear flag situation happening here. So actually I'm gonna measure this one as well. Let's see here. So we had a 20 near 21 and a half move from the low, or the high, I mean. And then let's see. Yeah, in terms of the bear flag, this thing has bottomed out. But with that, if it has not quite bottomed out, we still have that contingency plan of that head and shoulders pattern. So just gonna remove this trend line. All right, so there we got it. If like I said, even in in agreement with the yearly chart, still watching that 52-week low area and that mid 120s. So we'll see how things continue over the course of the month for sure. But the monthly levels are pretty much lining up with the yearly levels, so I'm not going to add any other trend lines really, in an effort to keep my chart as clean as possible. Um, let's see. I am seeing a little bit of a. I know I just said I want to keep my charts as clean as possible, but sometimes I just can't help myself. All right, so here, this is pretty much what sentiment has been since COVID in terms of bonds. So in my opinion, it may not be too late. If I wanted to get in on some of this bond money, but again, like I said, um, you got to think about that nuance that I talked about with money flowing from the higher maturity bonds or the longer maturity bonds to the shorter maturity bonds. So I'm not even sure. There might be some ETFs that are geared toward those lower maturity bonds, but I don't know of them right offhand. I'd have to do some research to be honest. But um, now I'm interested in seeing what the price action looks like for those lower maturity bonds. Now that I'm thinking about it, but between these two trend lines, that's where the price has been trading for the most part since COVID. Um, but I'm not gonna leave those trend lines there because I don't like how it makes my chart look. So I'm just gonna I'm gonna remember that visual either way, and I have my levels plotted out that I'm pretty much looking for. So we're gonna remove that one and remove that one. All right, let's check out the weekly chart. Weekly. Okay, so this is a 3-year weekly chart. You see just a nice little sell-off from 150, the mid 150s down to 116. So looks like the price may be starting to level out. And so far this week, we got some indecision. So this candle may look different as we round out the week. But either way, looks like we have a bit of a descending channel happening here on this weekly chart. So as I've stated before in previous videos, when you see an ascending channel or descending channel, typically the price will consolidate out of those channels um, before it transitions into the next phase of the market or the bullish or bearish phase of the market cycle, depending on whether it is a um, ascending or descending channel. So possible that we could be looking at a range between the 52-week low up to maybe the mid 120s on a week to week basis. So what I'll do is um, what I'm gonna do is I'm not even gonna necessarily prioritize this channel right now, um, because again I don't want my chart to look messy. But I'm going to kind of prioritize this range instead. So boom, make this purple, because on my weekly chart that's just an area where I'm thinking that the price could possibly go to short term or more near term. So there's some resistance there. Definitely going to be watching to see um, how this shapes up toward the end of the week. If we get a reversal pattern here at support, then maybe the next week, going into next week, I'll be looking for some continuation, maybe some bullishness going into the next week. Maybe the price makes a move toward 120 or mid 120s, something like that. Looks like it tends to have a decent ATR on a week to week basis, probably somewhere around 4 points a week, 3 to 4 points a week. Um, so far this week it's moved below 3 points, so we got a catalyst coming tomorrow that may change that range. But yeah, so again, same levels on a weekly chart. Um, let's take a look at the daily chart and see where the price is trading in relation to those popular moving averages, being the 50 and the 200. I already know it's below the 20, most likely, but I'm gonna just add it on and see. Studies, edit studies, and let's just add on another. I'm not gonna save it or anything because I just don't want to. Simple as that. 20. All right, so 20. Let's just make it a different color. I'll make it white. Just hit OK. Yeah, it's definitely below the 20-day moving averages, right around 121. So we could see it make a move for, again, like I said, that 120 area, which it will be, coming up against that resistance that is the 20-day moving average, which also happens to be the mean. So so far you see the prices ranging on a day-to-day basis. And again, I said that on the yearly chart, it looks like the prices started to flatten. On the monthly chart, looks like it started to flatten. In the weekly chart, I saw some ranging as well. And the daily chart is just confirming all of that. So it's been ranging for the past several days, down toward closer to that 52-week low. But yeah, so it's definitely one that I'll be watching tomorrow as well, along with or tomorrow. You won't see this on Wednesday, but I mean, when I say tomorrow, I mean May the 4th, which is FOMC, but this video will come out after the fact. So you'll get to see, you'll get to compare, my hypothesis, my discussion versus, how TLT looks at the time that this is uploaded. So we'll see how it goes. I appreciate you guys watching this video. If you know of any tickers offhand that are geared toward those lower maturity bonds, let me know. I'm going to do some research after this to see what I see. And I'll catch you guys in the next video.